Hey folks, it's Jeremy Whaley here. Let me ask you, is it possible to know the market's about to sell off before it starts selling? And the answer is yes. We actually have a lot of different techniques that we use to determine these things, but one of those is a discipline called candlesticks. And in this video, I'm going to share with you the top 5 most bearish candlestick patterns that we ever see. And when you see them, the market usually goes down pretty quickly. So if you want to find out when the market's going to go down, watch the rest of this video. Let's go. Hello everybody, it's Jeremy Whaley here from Trade Maestro. If you've not subscribed, go ahead and get yourself subscribed to the channel and check us out over at trademaestro.com. Lately, the market's been selling off quite a bit, so depending on when you're watching this video, it may be in the middle of that or maybe it's later. Doesn't really matter. The reality is markets sell off. It's part of the ebb and flow of how the markets work. Now, the question is, can we know when the market's about to go down, and is there a way to profit with that? And the answer is yes and yes. We're not going to talk about the strategy piece today. What we're going to talk about is we're going to talk about a discipline called candlestick trading. And I want to show you the 5 most bearish candlestick patterns that you're going to see in the market, which means if you can just learn to identify these 5 patterns, then it's going to help you stay ahead of some of those bearish swings. Now, I want to preface up front and say that there's a lot more than just these 5 patterns. And I want to say there's a lot more to candlestick trading than just what I'm teaching in this video, but this is going to be a really good immersion into it. And if you already understand a little bit about candlesticks, then this will certainly highlight the 5 patterns that are going to matter the most for identifying when those things are coming. So that's what we're going to be getting into in this video. And if I can get my screen to do it, my head's thing, there we go. These are the top 5 most bearish candlestick formations that you're going to see in the market. So let's, before we get there, let's cover a couple of basics about candlesticks, just in case you've never traded with candlesticks before, in case you don't understand how they work. Let me just highlight a couple basics and then we'll get into the 5 patterns. So the first thing to understand about candlesticks is a candlestick is simply a different way of looking at the 4 key price points of the chart, which is the open, the high, the low, and the close. So if you've looked at a bar chart, you're used to seeing the open, high, low, and close. And a candlestick is just another way of representing that. And that's really all there is to it. So you can do this on any time frame. You can look at a candlestick on a daily chart, a weekly chart, 5-minute chart, any time frame you want. And the candlestick is just going to be relative to whatever time frame you're looking at. So if you're looking at a daily chart, then the candlestick is representing the open, the high, the low, and the close of the day that you're trading right there. If you're looking at a 5-minute chart, then it's the open, high, low, close of that 5-minute chunk that you're trading at that time, okay? Now, it's different than your typical bar chart because it shows color for each candles. And historically, those colors have been black and white. Those are the normal colors that we see for candlesticks. Let me take this full screen so you can see this a little bit better here. Just your white candle and your black candle. The white candle represents a higher close and the black candle represents a lower close than open. If you've never seen these before, that's what it's going to look like there. Now, before I go too far, let me just kind of say a word on colors. Traditionally, the colors that you're going to see are white and black because that's the way that they were drawn. But today, with modern technology and modern computers and everything, we often see red and green. That seems to be the color that people like to work with. Now, in and of itself, there's really nothing wrong with red and green, but it's not the historical way that we present candles because the way that we present them is not actually colors, but rather a solid candle and a hollow candle. So let me kind of show you what I'm talking about here. Whenever we talk about black and white, what it really is hollow, and that's going to be a white candle. Now, on a white background, it looks white, right? You just draw the open, high, low, close, and since it's a white piece of paper or whatever the background is, it ends up looking white. And then a solid candle is going to be the same thing, but we color it in, and that's why it looks black because it's actually the color of the ink. So back in the 1700s, when candles were being developed in Japan, they didn't have computers. They couldn't color it red and green. It was all just your one pen color, and it ended up looking white and black just simply because that was the paper that it was drawn on and the ink that it was drawn on. So today, if you see green and red, that's fine. For me, I actually still prefer the hollow candles because that's the way I grew up drawing candles. I mean, I've done this for 20 some odd years now, and I've done it the old school way. But, you know, most modern computing platforms and whatnot will start off with some sort of a red and green. So if that's what you see, then no big deal. I will probably show you some examples of that as we go through this video here. Key point on the colors here, it's really determined by the close relative to the open. That's the most important thing you need to understand about the colors. The color itself is irrelevant. What's important is that you understand what the color is related to. So when you look at a white candle here, I'll take this full screen again for you. When you look at a white candle, the opening price is going to be the bottom of the square, basically. That's your opening price. Your high price is going to be the top of the line. We call that the upper shadow. The bottom of the low of the day is going to be the bottom line. And then the closing price is going to be kind of the top of the box. And then that main piece there, that big white square, that is the body of the candle. So it has a higher close than open. If you look at a black candle or a colored or a solid candle, whatever you want to call it here, the opening price is going to be at the top. The extreme high is still going to be the top of the shadow there. The extreme low is going to be the bottom shadow, and the closing is going to be the bottom of the solid box in this case. So if you look at the way I draw my candles, typically, it's going to look like this right here. You might look at that and think, well, those look like black candles. Actually, they're hollow candles because they're on a black background. They look black, but it's actually a hollow candle drawn with a green outline, and then a red candle is the solid. And that's the way I prefer to draw them. That's probably what you'll see me doing here. If you like solid green and solid red, that's fine. It throws me off because I don't see solid green. I see solid. Anyway, regardless, the determination of the color is whether it was a higher close or a lower close relative to the open. So you look at these last couple of candles, you say, well, these last candles are lower than the previous day. Why are they green candles? And the answer is because they're higher closes than open. So candlesticks, it's really important to understand the color of the candlestick goes with the close relative to the open, not today's close versus yesterday's close. It's possible to be down 1,000 points and have a green candle if you closed higher than you opened. So a gap that can happen. So that's what you need to understand about that. For beginning candlestick traders, that can be pretty confusing. All right. I think I've probably said enough about that. Let's get into the top 5 most bearish candlestick formations. And I'm going to go through these quickly, and then we'll look over at some charts, and we will see them in context. Now, before I do that, before I get into the context, let me go over here to a chart, and let me just kind of highlight some stuff with you. When we think about candlesticks, most of the time when we talk about candlesticks, people are thinking bullish or bearish trend. Candlesticks are not trending indicators. Candlesticks do not tell us anything about the trend. What candlesticks tell us about is the day-to-day turning of the ebb and flow of the trade. And so, you know, when we talk about trends, we're looking at things like moving averages, trend lines, bigger picture tools. Candlesticks are a small, narrow tool. On a daily chart, it's going to give us about 2 or 3 days worth of information to work with, and that's really it. So you're not going to see a bearish candlestick formation and say, oh, because of this bearish candle formation, the next 9 months are going to be bearish. That's not how candles work. If you come back over to the chart that I was about to show you here, you're going to notice that what charts do, what stocks do, and it doesn't matter what it is, they all do this. They turn and they go up and down like I just drew on the screen here, okay? Where your candlestick formations are going to be really relevant and valuable for you is in these turns, these locations right here, okay, at the tops of the turns. And we call that your pivot area or your turning point. That's the location where the candlesticks matter the most. And like I said, there's a lot I can teach you about candlesticks. I'd love the opportunity to do that. I just can't go really deep here because if I did my full candlestick training, it'd be like 3 hours. And well, I guess I could do that. I mean, I really could. No, there's nothing to say that I can't do that on YouTube, but I'm not going to. This is going to be just the 5 top most bearish candle patterns here. So if you want to learn more, then get subscribed over at trademaestro.com or at least here on the YouTube channel so you can get some more stuff here. But coming back to the function of the candlestick, we use those candles to determine the pivot, the turning point of those swings, swing highs and swing lows. And so that's when we're going to use it. And that's where these 5 patterns are going to be the most relevant. So again, coming back to the chart, would it be useful if you saw one of those patterns right here, and you knew after that bullish swing that it's losing momentum and it's starting to head down? Would that be useful? And of course, the answer is yes. If you saw this thing bounce and then you saw one of those patterns right here that said this is going down, or you saw one of those patterns right here that said the next move should be down, is it useful to recognize before the next bearish swing? And the answer is yes. Is it useful over here to recognize before a bearish swing? And the answer is yes. Or is it useful in the middle of a move, for example, right here or right here? Is it useful to see that the pattern is telling us that the swing is going to continue? We call that a continuation pattern. And is that useful to recognize? And again, the answer is very much a resounding yes. So again, I want you to understand that candlestick formations are a very short-term sentiment tool. They give us insight into what the traders are feeling in that moment, and they kind of help us forecast the next 2, 3, maybe 5 days out. But they're not going to give us insight into the next 6 months of the trend. That's a trending tool, totally different function. So, all right, with that said, let's get over here and let's look at the top 5 most bearish candlestick formations. And the first one I want to share with you is what we call a dark cloud cover. Now, I didn't come up with these names. These are, I don't know who came up with these names. They come to us from Japan and then translated through, I guess, through the work of Steve Nissen, because he's the guy who brought candlesticks to America. So I don't know who came up with these names, but dark cloud cover is the first pattern. I try to use the official patterns for these candles, official names, I should say, for these candles, so that we can kind of keep some common nomenclature as we work across different platforms and whatnot. So dark cloud cover is the first pattern. And here's what it's going to look like. It's a 2-line pattern, meaning it's got 2 candlesticks. It's going to occur in an upswing. So the market's been moving higher, and then you're going to see these 2 patterns. It's going to consist of a white candle followed by a black candle. And here's what happens. The black candle gaps up and then pierces halfway into the first day's candle. And when you see that, it usually leads to a bearish reversal, especially if it's at resistance. So let me give you an example of that here. Bearish reversal at resistance. Here is my little drawing. You notice the three preceding candle lines. Those really don't matter. It doesn't matter what color they are. The issue is that the swing is going higher. Then you see the white candle. And you see, if my pen will let me draw it here, which it didn't. Let's try. Nope, that didn't work. Let's try this here. Of course, I got the yellow color, which you can't see on a white background. Forgive me. Let's try this one here. There we go. You see how we closed here and gapped up to this opening price on the black candle, and then it traded down and it closed down here, and that's at least halfway into the preceding candle. You see that? Okay, so that's a dark cloud cover. And the idea, the picturesque name idea here behind this pattern is that the clouds are building and it's about to rain. You know, pretty straightforward. Most of the candlestick patterns have names that are very picturesque, because candlestick trading is a very picturesque form of market analysis. So that is a dark cloud cover right there. Now, if you were looking at these with, different pen colors here, or different candle colors, I should say, you would see this as a green candle probably. And if you're looking at most platforms, they would draw it as a solid green candle, because technicians who created charting patterns or charting platforms, they are not chartists. They don't really know why we have white and black. They just think they're colors. So you'll see this right here. You'll see green and red. Okay? And that would be, I'm sorry about this. My computer, when I have all these particular things going, if I start drawing in the slideshow, it keeps bumping me out. So that's why I have to keep doing that. So that would be the green and red version of it right there. And that's how you'll see it. But the key here is that it gaps up and then it pierces, or it trades down into the previous day at least halfway. Now, if you're doing this on an intraday chart, and this is a relevant point to mention here, if you're trading your candles on a 5-minute chart or a 10-minute chart or any kind of an intraday time frame because you're day trading, for example, you will not have the gap, that opening gap. That is going to be exclusively on a daily chart or even on a weekly chart, but you're not going to see it on the intraday chart. So basically the way that you adjust this is you just know that it'll be a matching high and then it could still pierce halfway into the preceding candle. And that's essentially a dark cloud cover on an intraday chart. Okay, so that's the first pattern, is the dark cloud cover. The second pattern is the bearish engulfing, one of my favorite bearish patterns, and here's what it looks like. It is also a 2-line pattern. It's going to also occur in an upswing because these are bearish patterns, so they indicate we're going to be moving down. So it's going to occur in an upswing. It consists of a white candle followed by a black candle that fully engulfs the real white body of the preceding candle. And again, it's actually going to gap up and then it's going to close below. That's the engulfing part. I'll show you this in a picture in just a moment. And this is, again, it's a bearish reversal at a resistance. So here's the example that I have for this. And you'll see, you're in 3 little candles moving up. Doesn't matter the color here. And then we gap higher. See that gap up there? Okay, so we gap higher. And then we trade down and we close lower down here than the previous day. And that engulfs it fully, it's bigger than the previous day's candle session. So that is a bearish engulfing. And again, very, very bearish formation, especially at resistance after an upswing. If you see it at support after a downswing, not really that important. Same formation, just doesn't have the same meaning. But if you see it at resistance after an upswing, it's a bearish engulfing formation, okay? The third one is what we call a one black crow. And this is not a very popular pattern. It's not one that you hear people talk about very often, but it is one of the most powerful, most effective bearish patterns that you will see. And in fact, when I was, many years ago, I'd actually been trading for quite a while. I just happened to start noticing this pattern and I started digging. I was like, I don't have any name for this pattern because there was no name for it. And I started digging for it. There was never mentioned in any of the Steve Nissen literature. The guys who originally were teaching candlesticks in America, this was 20 years ago, but nobody talked about it. And then finally I found this obscure listing somewhere and they referred to it as a one black crow. And this is a great pattern. It is one of the most bearish patterns you'll ever see. The failure rate on this is extremely low. I mean, when you see this pattern, the market almost always goes down. And here's what it consists of. Again, it's a 2-candle pattern. And I might stop here and point this out. Are you noticing a pattern? Everything in technical analysis, for the most part, is patterns. And I'm giving you, all sorts of different patterns here. And there's a pattern within the pattern. And that is on these 2-candle formations, the colors alternate. So on the bearish reversals, like the one black crow, bearish engulfing, and the dark cloud cover, on these bearish reversals, you're going to have a color alternation where the first candle is a white candle, or it's a bullish candle, whatever color you've got your chart set to. So it'll be a white candle, and then the next day will be a bearish candle. So it's alternating white to black, or green to red, or whatever your color formation is that you have on your chart. So just remember that the names, I really don't care about the names. I don't care if you call this, Uncle Pete's bearish candle colors. I mean, I don't care what you call it, but it's a one black crow. The key that I want you to understand is what it means in the right location. And that location is at resistance. With the one black crow, it's going to look like this. We're going to have a large white candle, and then it's going to be followed by a black candle that gaps down. Specifically, this one gaps down. Now, with the other two, we gapped up and we traded down. With this one, we start the day by gapping down, and then it closes below the previous candle completely. This is an extremely strong bearish reversal signal. It happens, I don't want to say it's that rare because it's not that rare. It's a relatively common pattern. You just don't hear people talk about it very much, and it is an extremely powerful tool to recognize. So we'll take this in pretty full screen here so you can see that. And you notice, again, the 3 days before doesn't matter. You just got to be an upswing. You get to the top. Ideally, you're right at a resistance level. You close up here at the end of the white candle, and then you gap down to the black candle, and you close way down here below the previous day. It is such a bearish candle. It's I can't even put words to it. It is extremely, extremely bearish formation. Very, very solid. All right, so get that one ingrained in your mind, and I kind of make a big deal about it because most people don't talk about it, and it is such a good pattern. One of my favorites for sure. All right, let's talk about a couple multi-day patterns or multi-candle formations. The number 4 pattern is the evening star reversal. Excellent bearish formation. This one is going to be a 3-candle pattern. So there's going to be 3 candles that makes this one up. The first one is going to be a large white candle, followed by a small spinning top, which could be black or white. Doesn't matter the color. And then finally, you're going to end up with a large black candle that completes the formation. And if you follow that color formation, again, you have white to black. It's just now we're going to inject a spinning top that's a small candle right in the middle there. So you have a large white candle, small spinning top, large black candle, and then that completes the top. Ideally, that second candle that we call the star, ideally that gaps up, and in a perfect world, it gaps down too. That rarely happens like that. But if you can get at least a gap on one side of the star, it's really that much more powerful, whichever way it goes. So it's an extremely strong bearish reversal formation. I love evening stars. They play out very, very efficiently, and it's very easy to trade with them. Again, if you're doing this like on an intraday chart, day trading, you just don't expect any gaps because it's not going to happen. But on a daily chart, it'll look something like this. You see you're in an upswing, large white candle, we gap up to the black candle or to the spinning top. Again, that could be white or black. The second candle color does not matter. And then we have a large black candle, and you can see how that forms together there. So very, very good formation. It's called an evening star reversal, one of the best. All right. And then finally, one of my favorites, the falling 3. This is my 5th pattern. It's ironic. It also has 5 candles in it, but it's called a falling 3 pattern. It is a bearish version of another pattern that we call the rising 3, which we're not going to get into, but you can just imagine that it's the inverse of this. It's a large black candle followed by 3 smaller candles that stay pretty much inside the first candle. Certainly don't trade much, if any, above the first candle. And then we have a large black candle to complete it. So there's a 5 total candle pattern. Those 3 candles in the middle can be any color. It's a falling pattern. This is actually a continuation pattern. It's a very strong bearish continuation pattern, suggesting that the swing is going to continue in a bearish direction. And it is a excellent, excellent pattern. It's probably one of my top 5 candlestick patterns, period. Definitely one of the top 5 bearish patterns. Very, very strong pattern. Shows a lot of strength in the bearish direction. Again, this is a continuation pattern. So all the other patterns we talked about are reversals. This is a continuation pattern suggesting that the swing is going to continue bearish. Here's what the example looks like here. You're in a bearish swing already. So notice we didn't start in a bullish swing. We're starting a bearish swing. Bearish candle, 3 smaller candles that are basically inside the trading range of the first candle. And then the 5th day is another bearish candle. I want to reemphasize those 3 candles in the middle can be any color. That doesn't matter. But the 2 outside candles, day 1 and day 5, those need to be black candles or solid bearish candles, whatever color you're using. Those are bearish candles. And because it's a bearish continuation, it's a falling pattern. It gets the 3 name because there's 3 candles in the middle. So a lot of people look at this and they think it's a rising 3 because the 3 candles in the middle are drawn kind of like they're rising. That is not true. It's a falling 3 pattern, and it's falling because it's falling, and there's 3 candles in the middle. Okay, so here's what I want to do now. Those are your 5 patterns right there. And what I thought I would do really quickly here is just come over to a recent chart of the Dow and show you these patterns in action. And I'm just going to take the most recent time period. And that's it. That's it. Just going to look at the most recent, a little bit here, starting at the beginning of 2022. And here is the top of 2022. And we've got a pattern, folks. We got a pattern right there. What could that pattern be? Well, I don't know. Let's go zoom in and look at it here. So let's make this really big so you guys can see it wherever you're watching. Okay. And I kind of half shaded these candles so they're half green, half opaque or clear. But notice right here, you see this green candle. This is the very, very top. There is your bullish your bullish trend that got us up here. Okay, and then what do we have? We had a bullish candle, and we closed here, and we gapped down to right here. We traded down, and we closed below the previous day. That is a one black crow candle formation, and sure enough, where did we go? We went down. We went down bigly, and look, folks, it wasn't just we went down. I mean, this was the top. This was the peak. That's the all-time high of the Dow Jones Industrial Average right there. And right spot at the all-time high of the Dow Jones Industrial Average, what do we get? We get a one black crow. All right, let's go to the next peak here. And notice we've been in a bullish swing here for several days. And what do we have right here? It is another one black crow candlestick formation. And we sold off just for a couple days. We tried to make a higher high. And what did we get right here? Well, you got a solid, a bullish candle. It's a green candle here. We got a small spinning top that gapped up in the middle. See that gap there? And then the big bearish candle right over here. What is that? 3-day formation? We just talked about it. That is an evening star reversal. So I think this is really interesting context here, because in this context, we already had the all-time high where we had the one black crow. We got the bearish swing happening, and then we bounced, and we put in another one black crow. We started bearish, but we got what we call a doji candle in there. It gave us a little bit more momentum to go higher for like 2 more days, where we got the evening star reversal. So one black crow, next peak, one black crow, evening star reversal, right back to back. That should give you a lot of confidence that this trend is not going higher at that point. It's going down, okay? And so sure enough, that's what happened. Let's move forward here. Let's look at the next peak. The next peak that we had, this is actually another bearish formation in here called a harami. I didn't talk about it because it's not that great of a pattern. And you can see while we did go down, we didn't go down very much until we get here. And what is that? Well, you may not be able to see it, so let me make it a little bit bigger for you. Notice a little small bullish candle. We gapped up and we traded down below, so it's fully engulfing. There is your bearish engulfing formation right there at the peak, okay? And sure enough, the bears are back. Excuse me. If I was more professional, I would go back and edit that cough out, but I'm not going to. So, all right, the next peak that we see in here, there's some others we could talk about, but I just kind of want to highlight all these that we talked about today. We have right in here, this one just happened today as I'm recording this video. We have a big bearish candle, 3 smaller candles inside, followed by a 5th day big bearish candle. There is a falling 3. Okay. Falling 3 in action. So yeah, where do I expect this trend to go? I expect this trend to go down. And of course, if you've seen my market updates lately, when I'm recording this, which is August of 2022, then you know where I'm at on that. So there you have it, folks. I mean, you've seen it now for all of these. Every one of these peaks, all-time high had a one black crow. Excuse me, one black crow. Then we had another one black crow followed by an evening star reversal. And then over here, we had a bearish engulfing. There was other patterns in here too. We won't talk about those right now. In here, we had a couple haramis in here. And then we had the falling 3. Okay, so just in the last 8 months, of the Dow Jones Industrial Average here, you have seen 4 of those 5 patterns. And we've seen it at every peak. Every single peak has had one of those patterns in there. The one that I didn't see here was the dark cloud cover. I'll have to go pattern hunting to go find one, but they're there, and very, very good patterns as well. So I hope this has been very helpful for you. These are 5 of the most bearish candlestick formations that you're going to see in the market. They will help you be a better trader, learn them, memorize them, commit them in here to your unconscious mind so that it always just oozes out. Then when you see them, you know to tighten stops, possibly reverse your trade. You know, there's a lot of context to the right way to implement candlesticks, but this gets you a long ways down the road. And what I'd like to encourage you to do is, just keep learning more. There's a lot more I can teach you about candlesticks. I have about 3 hours of training on candlesticks, just on candlesticks alone. That's included in my membership over at trademaestro.com. So if you're not a member over at trademaestro.com, then go visit trademaestro.com. Here, let me put this on the screen here. Where is it? There it is. Go visit me over at trademaestro.com. You can start a membership over there. It's really affordable, and then you'll have access to all this kind of stuff. You can also start for $100, you can start a 21-day, there we go, 21-day pick winning stocks challenge. That's going to teach you a whole lot of how to pick the right trades. And if you don't want to spend any money, that's fine. There's free stuff over there too. I also have like my 7-day, 7 secrets of trading. It's not what I called it. I forgot what I called it. But anyway, there's a free course in there. Seven trading secrets. I think that's what it was called. And it's right there on the homepage as well. So you can get signed up for any of that over at trademaestro.com. And at the very least, if you've not subscribed to my YouTube channel, subscribe right here, because right here is where I do market updates and I do videos like this and send stuff out so we can help you be a better trader so that the market doesn't have to beat you up. Because look, here's the truth. You should be beating the market, and you shouldn't just be beating it. You should be leaving bruises and sending those people packing to wherever they are. So stay close to Trade Maestro so we can teach you how to master the markets, because that's what Maestro means, right? Maestro is a master. So if you're a Trade Maestro, then you are a master of the markets. All right. Again, I hope this has been helpful for you. Thanks for watching. Until next time, happy trading to all of you, and we'll talk to you soon.